GetCrack. Wake up, motherfucker.
Gets very interesting for the Federal Reserve. That two-day meeting concludes 2 weeks today. Mike McKee, our economics and policy correspondent, joins us now for more. Mike, the data is what the data is. It's all we've got. And I know we're only a month into this, but I wonder where we'll be by the time we get to that Federal Reserve meeting.
I suspect we'll be about where we are, John, given especially what Howard Lutnick was just saying about we're going to make some adjustments this afternoon, and then the real tariffs come on April 2nd. Even though the Fed has some detail now to work with about some tariffs, there's still a lot more they don't know. That's what John Williams' point was yesterday in his interview with us. He said, you know, we do know that tariffs are inflationary. We do expect inflation out of this, but we don't know how much, because we don't know how long the tariffs will last, how many other tariffs will be put on, and what they're going to, what costs they're going to impose on the economy. So they're not much better off, put it that way, and they won't be by the 19th than they are right now.
You were speaking, Mike, yesterday with the Fed's Williams, and it was a great conversation. It was an interesting nuance that he had about inflation and how it would affect their thinking. How much of the mainstream does he represent, and how would you characterize how this does color the path of rate cutting ahead?
Well, I think he's probably in the mainstream in the sense that what he was saying is tariffs are inflationary, but we don't know, because we don't know what the president's plans are, whether that inflation carries through. In other words, we're going to get a rise in the price level, and that's what some members of the Fed have focused on, like Chris Waller. Now, does that continue because you have a sort of rolling series of tariffs coming through, or is it that one-time price level rise that the Fed can look through? They just don't know that yet. And at the same time, they're keeping an eye on the overall economy and whether it's rolling over. The data, as we've been talking about, David Merkel was talking about, are getting softer, but of tariffs coming through, or tariffs are inflationary, but we don't.
Inflation and how it would affect their thinking. How much of the mainstream does he represent, and how would you characterize how this does color the path of rate cutting ahead?
Well, I think he's probably in the mainstream in the sense that what he was saying is tariffs are inflationary, but we don't know, because we don't know what the president's plans are, whether that inflation carries through. In other words, we're going to get a rise in the price level, and that's what some members of the Fed have focused on, like Chris Waller. Now, does that continue because you have a sort of rolling series of tariffs coming through, or is it that one-time price level rise that the Fed can look through? They just don't know that yet. And at the same time, they're keeping an eye on the overall economy and whether it's rolling over. The data, as we've been talking about, David Merkel was talking about, are getting softer, but the hard data, we haven't quite seen a lot of evidence on that yet. So the Fed is basically going to sit tight on March 19th and not do anything. I thought one of the interesting things we talked about, Lisa, in terms of monetary policy going forward was the summary of economic projections and the dot plot, and basically John Williams said they're not going to mean a whole lot, just like they didn't in December, because we don't have visibility going forward.
They never do, but we produce
the announcements. How quickly do you think how quickly does this money get spent? Germany's talking about 500 billion. How quickly do you think that money comes?
Well, of course, we all know that what the main future coalition parties, the Socialists and the Conservatives, have agreed yesterday needs to go through the parliament. So we need a two-thirds majority. I think they have a rash plan on going through this next week. Then the next step will be the capability list. So very clearly we see a paradigm shift in Germany. The past decades have been more or less ruled by the principle of design to budget. Now we're designing our armed forces, our defense, to capabilities. That's what we need to work out. And then I would say we can be very quickly on bringing this up.
How quickly? Okay, so we're designing for capability now. clearly there is a need for significant amounts of kit for the armed forces if they are going to be a credible deterrent. In terms of how long that is going to take, there is a need now to do that, but it takes a while to get German defense companies spun up, to get the training done, to get the factories built. We talked about this last time. Is that process accelerating now, and how quickly is the rate of change developing?
Well, I would see a kind of spiral approach. I mean, looking at Hensoldt, as I told you last time, we have invested 1 billion recently. We took responsibility. So the commitment, whatever it takes, is very rewarding for us. And so with what we have done, building a new plant in Oberkochen, building a logistical center in Leiching, with all of that, I think we scaled a bit above the current demand in anticipation of a 3 to 3.5% spending. So we have like 50% additional capacity that we can bring immediately into this game. And in that regards, we will take, of course, the next step on investment as the orders turn in. Coming back again on this spiral, I think we have a couple of programs where we go into framework contracts. I think here very quickly, based on the budget availability now, we can order these additional, looking at the 20 Eurofighters. We have a program called Pegasus, where we produce 3, but we have options of additional 3, maybe 6 aircraft. So I think those orders can come in very quickly. And there's a new portion, as there will be a mix of I would say, classical, conventional, which is tanks, aircrafts, and ships. There will be also a portion of innovative things. I mean, going into space, not relying anymore on the US, innovation with regards to AI, building data networks. I think also here we're well prepared, and we have to work those capabilities out.
Oliver, I'm just trying to get a sense of how much of this money, European and German money, will stay in Europe and how much of it might go elsewhere. In the short term, will there be a need to pay Americans for arms?
Well, I think, first of all, we see a very strong alignment between what Germany says, releasing the debt brake now for the defense budget, which I think is a very strong commitment, not putting a ceiling. Then we have EU with a rearm plan of Ursula von der Leyen, and I've been to Brussels on Monday, and what I hear is definitely there's a lot of buying Europe, and of course also the German plans are to reinforce the economy, buying in Germany. But on the short to mid-term, very clearly also operationally, we do depend on the US. So, I mean, also Germany has heavily invested under the first extraordinary budget into US technologies. But I think here we will have a strong call, and we are working with the US players, we will have a strong call of sustaining those capabilities through German and European partners.
Okay. Will you be thinking about adding other product lines, Oliver? Because your focus is around electronics and things related to defence in that area. When Ursula von der Leyen was talking yesterday about ammunition, drones, vehicles, how does this change your business?
Well, I think I'm a big fan of strengthening strengths. In that regards, I think also with our need now to deliver at scale, we will remain focused on sensors. Of course, we broaden the sensor landscape. Here we are open, also looking at M&As and a couple of topics. But I think the more important thing is going to smart and connected sensors. So being more software, more data-centric. That's what our strategy North Star is about. And I think that is where we will invest and where we will put our focus as we go forward. Because that's the innovative part of now spending budgets, as we will never cope with a spiral of a war economy, bringing platforms and so on. I think it's really about smart arming. And here I think Hensoldt will come into place, and that's not about entering additional branches.
Oliver, good morning. Lizzie here. I'm going to be optimistic here and ask you, however far away it may seem now, if we do get peace in Ukraine, if there's a truce, how do you expect that would affect European defence spending? Do you still think that this commitment to an era of rearmament would be there? And how would that affect your business?
No, I mean, everything what we see at the moment is very sustainable. I think the budgets that are under consideration is a plan for the next decade to rearm Europe, and I think in Germany it's the same. I mean, looking at the Hensoldt business, our exposure is in a single low-digit percentage to Ukraine. And again, a peace in Ukraine, cease of weapons in Ukraine, will not erase the Russian threat. So that means clearly Europe has to continue on that path. And it would be a great risk if we stop those investments just for the sake of a ceasefire in Ukraine.
Oliver, the stock came into the beginning of this year at 35. We're now trading at 66. We've got a volatility interruption this morning. The stock has absolutely soared. Are you going to sell stock? Should you sell stock at this point to fund the enhancements that you need to make to the business? Very briefly.
Well, no, I think it's also premature to really look. As said, I think this all has to go through Parliament first. I think we're well prepared. As I've said, we have invested, we took the... So there's no need for quick capex and so on. So in this regards, we do our math now based on the decisions of the German Parliament. And then as we also discussed with the analysts, we will revisit our plans, our ambition, our guidance, I think in the second half of the year.
We'll look forward to that.
Today. For that, we'll turn to Leslie Picker. Hey, Leslie.
Hey, Carl. Yeah, this is some fascinating news crossing just moments ago that BlackRock is agreeing to purchase Panama Canal ports and over 40 additional ports. This is from CK Hutchison Holdings. This is an Asian group that owned these ports that BlackRock and GIP, General Infrastructure Partners, which is the infrastructure group that they purchased last year, and Terminal Investment Limited. As a consortium, they do plan to purchase this. The Panama ports, which are controlled by Hutchison, is what President Trump has claimed were controlled by the Chinese. He said he wanted to take back the Panama Canal from the Chinese. Well, this deal is a fascinating turn of events here. This would be BlackRock's largest infrastructure deal ever. The deal portfolio is valued at $23 billion. The actual constructs of the deal are a little bit complicated, so bear with me here. But Hutchison's 90% interest in Panama Ports Company, which owns and operates the ports of Balboa and Cristobal in Panama, is what the consortium is purchasing, in addition to its 80% effective and controlling interest in subsidiary and associated companies, which are about 43 additional ports as part of this deal as well. So the aggregate enterprise value of this deal is about $22.8 billion. And then just kind of reading through the release here, you see that CK Hutchison, co-managing director, says that the transaction is a result of a rapid, discreet but competitive process in which numerous bids and expressions of interest were received. And then they go on to say the transaction is purely commercial in nature, I'm quoting here, and wholly unrelated to recent political news reports concerning the Panama ports. They, of course, remain subject to confirmatory due diligence, settlement, and definitive documentations and normal and usual completion procedures. But I am told by a person familiar with the matter that BlackRock has been in conversations with the administration and Congress on the constructs of this deal. But again, guys, BlackRock purchasing Panama Canal ports and over 40 additional ports here for a transaction value of $23 billion.
Yeah, Leslie, the Panama element is definitely interesting. Two things, though. How does it compare to some of their other recent deals with GIP, with infrastructure? As I recall, Larry Fink's last comments did not suggest they were going to be that aggressive in acquisitions.
Yeah, so this is GIP was just recently acquired by BlackRock. It looks like they're going about this in kind of a consortium form. This is the largest deal the firm has ever done, $23 billion. I would bet that it's the largest firm GIP has also ever done. This is a very, very sizable infrastructure deal. Obviously, infrastructure has been a huge area in the alternative space, probably for about the last decade or so. The challenge, of course, with infrastructure is just the supply of assets and the ability to kind of construct these large deals in the tens of billions of dollars.
Yeah, I mean, it's interesting because of the ownership here. So This is CK Hutchinson. This is the big Hong Kong firm run by Li Ka-shing, right? I mean, it's when President Trump says that China has taken over the Panama Canal, this is what he's pointing to, that they have the ports there. So I would imagine that actually BlackRock is in the best strategic interest in the U.S., for the U.S. to have ownership there.
And that would be kind of, if you read between the lines of the press release where they say it was a competitive process. But then according to the people I've spoken with, they have been in touch with the administration. Now, I was asking sources, and I'm going to do some more calls after I get off TV here, kind of how this was initiated, the backstory, how this deal came together, as you will. Was it something where, the administration reached out to BlackRock reached out to the administration with interest? How exactly it unfolded? Because I think that is perhaps about as interesting as the deal itself as it pertains to this geopolitical environment. But it sounds like, at least according to the press release and according to those quoted in it, that it was a competitive process, kind of a standard, what you would expect to see in this type of deal.
GIP obviously has funds. They're a large sort of private equity infrastructure group, is what we should point out, bought by BlackRock, and they're obviously the ones doing the purchasing here. Leslie, look forward to more reporting on it. Thank you.
All right, folks, what's up? It is March 5th. Well, at least about 30 more minutes if you're on the East Coast. Okay, so I covered a lot there. We got German defense. You got Panama Canal. So a lot of the things I've been talking about the last few days about commodities. Okay, big important thing. Okay, we have the gold in Fort Knox. Right? You got the Ukraine minerals. So I think the board is set. The pieces are there. And now you got to really understand what's going on, okay? Let me first go over the markets, and then we can go to the last videos. I'll probably play midway or towards the end about stagflation. But for now, I want you guys to really concentrate on the new world order here, okay? Where the dollar is going to go, where the gold is going to go, silver, Bitcoin, everything, all right? So let me get my thing. Let's see. Okay. So, yeah, I'm going to cover the markets a little bit, but let me refresh your memory. So I was reading this stuff, and I've been trying to find everything I can about this Stefan Mirren guy, who's now, well, he's no longer the nominee. I think he is the Council of Economic Advisors chair for Donald Trump. All right. And it said, like, I was reading some articles about this paper in particular, a user's guide to restructuring the global trading system. And he cited an older work, which I have a bunch of downloaded articles from Credit Suisse. Okay, you can't find these much anymore because you had to pay money to get these. So this was March 31st, 2022, about a month after the Ukraine invasion, or whatever you want to say. Okay, and now we got this money, commodities, and Bretton Woods 3. So I think this layout, this plan that he crafted, is going to be implemented. All right. And essentially, let's see, I will just go down here. What I'm going to have to do is I'm going to have to go through all these papers because they're all like 6 to 12 pages long, each of them. This is just one of them that I have saved. And yeah, this is, I probably, what I'm going to probably have to do is summarize a lot of this work and give it to John to talk about, because he has a CFA, so he's a certified financial analyst. He passed those tests. So what he knows, and since I talked to him about the dollar milkshake theory, this stuff, and he worked in the IMF and whatever, he might have some clues as to what he thinks Trump will do in the next several years to implement this plan. So this is probably what everything about the tariffs, everything. The end game is to implement this strategy. Okay. So let me see here. All right. So he's going to talk about like two triangles. The coexistence of the two triangles then has huge implications for the course of inflation in the East versus the course of inflation in the West. This is serious. So what are these two triangles? It's this. Okay, one triangle where it's based on the dollar, and you have one triangle based on the renminbi, the Chinese yuan, essentially gold, right? Now, I don't know how Bitcoin is going to come into play, but we have a thesis written by an Air Force officer, his master's thesis, and Rashu pointed me to his interview by this guy that he knew, and that's going to be interesting. So I will have to watch that video, try to figure out what he says there, look at the thesis more carefully, and then also put it into this framework. So I think we're going to have a special program where I go through all this stuff. John will have to help me out and discuss it with me. We get Rashu in here for the crypto analysis. And then we've try to figure out exactly what Trump is going to be doing. Okay, because this will change everything by the end of his term. And that's what I'm trying to figure out. All right, so that's exactly what we're going to do. Okay, so hopefully I can get that set up because I think that'll be very important, okay, to figure out. And now you see with Germany now unleashing its spending power, so they're not going to be worried about. I did see some articles about like they're going to cut social spending to fund their military now, so that's going to be interesting. Yeah, so they're going to cut into it. They're going to make a trade-off. So they're going to spend more of their money on the military. Okay, we got that. So let's see here. Okay, so the two triangles. Bretton Woods 2, that's the dollar-based system we have now, served up a deflationary impulse. Globalization, open trade, just-in-time supply chains, and only one supply chain, Foxconn, not many. And Bretton Woods 3 will serve up an inflationary impulse, deglobalization, autarky. Autarky, so autarky means like a government, a country essentially doing everything by themselves without free trade. Okay, that's a reversal from free trade. Only one country does autarky. I think it's North Korea. Iran kind of does, but none. I mean, they still trade with some people though, and right, like Russia and China. And then you have the classic example of Nazi Germany. They definitely try to do everything on their own. Okay. And what else? Just in case hoarding of commodities and duplication of supply chains and more military spending, which is what Germany's doing, and probably soon to be Japan as well. They're gonna start relying less on us to do their like funding and supplying them with arms. They're gonna do it homegrown, I think, very shortly, to be able to protect whatever seaborne trade is left. Empires fall and rise, currency falls and rise. Wars have winners and losers. When Wellington beat Napoleon, the trade was to buy gilts. I am no expert on geopolitics, but I am an interest rate strategist, and I think the level of inflation and interest rates and the size of the Fed's balance sheet will depend on the steady state that emerges after this conflict is over. 3 is a magic number. The 4 prices of money are managed via Basel III and central banks. The 4 pillars of commodity trading are shaped by war. The New World Order will bring a new monetary system, Bretton Woods 3. Paul Volcker had his easy. He only had to break the back of inflation, but had a unipolar world order and the rise of Eurodollars to support him. And I talked about Eurodollars in that article yesterday. And if you listen to my dollar milkshake theory summary, You also understand the euro dollar and swap lines. The triangle on the left supported him. The triangle markets fussed about was the impossible trinity. You know, the stuff about monetary policy independence, FX rates, and open capital accounts. But that was about our currency, your problem. Jay Powell finding his inner Volcker won't be enough to break inflation today. He'll need a strong helping hand, a strong man to take on the inflationary mess caused by other strong men. Who's that strong man? I'm guessing that's Donald Trump at this point. The new trinity of Bretton Woods 3 will be about our commodity, your problem. The EU's inflation problem for sure, if not the inflation problem of the entire G7. Okay, so this was written again in March 31st, 2021 by Zoltan Pozar, who left Credit Suisse and has his own consulting firm. So, yeah, you can look him up. But we're going to have a big deal of things to deal with here. So now I'm going to go and do my summary. All right. Let's go. Let's do that. Let me bring up the charts. See what good trades we had today. So nothing changed. As I said, long everything with the MSTR. MSTR continues to be the best trade. If you use MSTX, I think you got about 20% again today. So another 20% gain. Very nice. I think overnight, we still have a good chance to go up even higher. I think we are going to continue on with Bitcoin. I think Bitcoin almost touched 92,000 overnight right now. Very good. Okay. So here is the chart. Let me pull it up. Let's see what we got. Okay. So that's MSTR. So yesterday, Tuesday, right? All right. Got in here. Okay. Sold some there, right? Kept a little bit. And I waited for today, see what happened. Added back more again. Sold up here. And then the end of the day, it got a little higher. Very nice. So kept some of that. See what happens tomorrow. I'll add back more. If it keeps going up, I'll add it right back. Because I think, let's see, how high do you think this thing will go? Depends on how high Bitcoin goes, huh? Bitcoin might go back to 95 again, just like it did on Sunday. So that's a good indicator. Let's see. 95. All right. No, it shouldn't be too far. Now, the question is, can it get back up to 98 or 100? So, yeah, today, if you use MSTX, the full range was, 24%? Yeah, 24%. Very nice. Okay, we're at a point here. Very good. So, yeah, use MSTX. Keep using that to go long. If you want leverage, that's 2x. So I'm going to see how high I probably want it to go. The last major high, probably here Friday on the 14th. Okay, so you got 10 more percent, so another 20%. Okay, very nice. Okay, so that's what I'm going to continue looking at. We have ASTS I talked about for a couple days now. So after earnings, very good reaction. Bought it at 26 because it held this 25 area. And today it's up 18%. So it's continuing upwards. I think it's ready to break out higher. Okay. So let's see. Let's see how high it could go. So it's at 30. Oh, shoot. Yeah, okay. It's going to make all new highs then once it gets past there. All right. Okay, good, good. And we have Lunar. I don't know. I might gamble on it. I haven't really decided yet. So tomorrow it will have its lunar landing. I was hoping it would go higher today, but it didn't have much reaction to the NASDAQ. Too bad. So LUNR, intuitive Machines. I believe it's called Intuitive Machines. So it has it's on a SpaceX rocket, gonna land on the moon with its module tomorrow around noontime. Okay, so watch the previous video where I went over that article or press release from NASA. So I was hoping it would just go up towards 18 before it lands. Then I could get a 30% and get out, but who knows? Maybe it'll land correctly this time and it'll shoot up to 20 and 24. I mean, so it's a gamble. It's a gamble you can decide to do. So I'll be playing that. Nothing else new, I think I'm going to talk about. So I'm just going to read an article about the defense stocks. So there's going to be 3 stocks to look at. Rheinmetall. Okay. Rheinmetall, RHEINMETALL, German. Ticker symbol RNMBY on the open over-the-counter markets. So I've looked at this stock before during the invasion. So it was around here, you see? That was the big bump on the invasion of Ukraine. And ever since then, it's been climbing. But this month, we started getting a big pump when Trump started saying it's not going to spend any more money in the Ukraine. So the EU now just they had their elections like a week ago. New prime minister or whatever, chancellor, as they call it in Germany. And I think they've gotten through the budget break. So they don't have a budget ceiling anymore. So they're free to spend. So it's $500 billion on defense. Okay. And they're probably going to take away money from social spending like welfare and things of that nature. Another stock to look at, HAGHY. The CEO was talking. That was who I was playing at the beginning of this show. HENSOLDT, Hensoldt. And we have another one, DRS. DRS is an Italian firm for defense, so they'll also get some money from this. Leonardo DRS. So this is a American subsidiary of them. So this actually trades normally on the NASDAQ. So also another one to look at. So I think, yes, a lot of these European defense firms are going to get rich off of this deal. So 2 of them, as you can see, the German ones already went about 100% this year to date. So we only been 2 months this year and it's already up 100%. So people are going to really go head first into the spending on defense, but may not really help American defense companies. All right. So you're going to have to look abroad for the big money. And also, we have to look at the dollar. The euro has been booming. So Dixie, the euro dollar index, has crashed this week, 3%. This is huge. So it's all due to the euro. We're back at 104. If you look at the yen, it's not because of the yen. The yen's still there at nearly 149 yen per dollar. Okay. So it's all due to the euro getting stronger right now. So something to keep in mind when you do your overseas stock buying. So when you buy those stocks, they're dependent on currency reflections. Okay. All right. Well, let's see what gold's doing. Gold's trying to come back up. Okay, good. Good. I see some silver miner going well. EXK going back to 4. Let's see if it can break to 5 this time and stop goofing off around here. But I think that'll be it. So we'll be done with a lot of that. If you're in GDX, the ETF for gold miners, or you're in GDXU 3X leverage, then yeah, there's not much more to go, I think. Probably in a couple months, that'll be done for gold and silver. Silver still has more work to do. Silver miners over here, but yeah, we'll see. But that's about it. I think come back later in the year for that. All right. And natural gas doing well. yeah, still getting the good weather to pump it up. So we're still up here at $4.45 per million BTUs, British thermal units. Okay, so keep watch on that. I expect it to come pull back, and then once it does that, then we'll have to go into boil again. But this time it's going to be real, right? This time it's going to be big one, so it's going to be another 200% move, I think, for Boyle. Now, JD will have earnings tomorrow, so that's one of the big techs in China. So I'm curious to see what the reaction is for that. And China has recovered what it lost last week, but I don't know if it's going to make a new high. This could be it for Chinese stocks. They'll make another attempt, I assume, but I think maybe only a couple more weeks left. And I think, yeah, China will have to fall back. But the dollar going down is definitely helping it. TME, yeah, Tencent, music, entertainment. Yeah, this stock looks good. And it's going to have earnings when? Next week. Okay. We'll see. We'll see. See, Tencent. Yeah, Tencent will also have earnings next week. Yeah, on the 19th. Okay. Maybe that'll be the end of the Chinese move. Those will be the biggest Chinese companies left to do. So JD and then Tencent. Every time I buy a stock in the OTC market, even if it hits my buy limit while on the current price, it shows up about 30 down. Well, because it depends. I mean, I don't know how where are you watching it real time or not? Because that's the problem. OTC isn't free. On TradingView, it's delayed by 10 or 15 minutes, probably 15 minutes delay. So if your order goes through, but the chart is showing you old data that's stale, all-seeing guy, then yeah, you might have to pay extra money for real-time data because OTC, yeah, that's how it works. It's not free to get real-time data. Actually, back in the old days, a lot of data that you got from your broker was delayed by 15 minutes because no, they didn't give it to you for free. None of that stuff was free. So, and you're talking about, I mean, the reason why you get real-time data now is not because you're not really getting it from the exchange. So, like, if I'm looking at something on the NASDAQ, like, let's see, what's TME is NASDAQ or NYSE. So it's NYSE, okay? You. So is it real time or not? Not really. It's synthetic. All right, this stuff is synthetic. So there's something called the BATS system, BATS. BATS give you quote unquote real time data. Let's see, BATS, BATS, data, real time. Let's see. How BATS real time data is a gateway to blah blah blah. Okay, okay, there's some Reddit article here about it. It seems that there is a free real-time data source called BATS, which is somewhat accurate. Yeah, somewhat accurate. You see? Yeah, it's real time, but it's not accurate. Like, so if I was making something to track actual prices to buy and sell, even that's not really accurate. And then 15-minute delay free data from the exchanges. I was wondering, the official sites, blah, blah, blah. Oh, man. Yeah. I'm afraid BATS has been bought by the CBOE, Chicago Board of Exchange. Anything better about them would have been shut down. They used to promote their exchange by sending out BATS, miniature baseball bats. And those were the good times. Oh yeah. Well, welcome to the stock market, guys. You guys, you retail people, you don't get anything. If you want real-time data, you got to pay. Like actual real-time data. The stuff you get now that your broker gives you or you see on TradingView, stock charts or anywhere or Yahoo Finance, yeah. You're not going to be able to trade correctly because if you're actually doing some algorithm trading, like high frequency trading or some real sophisticated stuff, you got to pay up, man. Sorry. So yeah. Yeah, man. Yeah, let me put that out there. That's interesting. Yeah. I didn't know there were baseball bats. They gave people baseball bats for promoting this company. Amazing. All right. So let me share the screen here. Okay. Here we are. Let's see, yeah. Someone on Reddit already talked about it here. Yeah, so I'm afraid Bats has been bought by the CBOE a few ways back. Yeah. Yeah, it seems you are correct. I emailed CBOE and they are trying to sell me their services subscriptions when inquiring about free Bats data. Yeah, it's over. You're not going to get anything free. Interesting. I didn't know that. All right. All right. All right, guys. I think I have enough. I don't know if I want to talk about Bats data real time. I think if you have Fidelity, it's real time on the over the counter. I'm not sure about the other brokers though. They might not. They might not feel it's worth paying. The big brokers might feel like, okay, we'll give it to you for free. Actually, like E-Trade for a long time gave stale data. Like, yeah, but only like maybe a couple years ago they started giving free data. I mean, real time data, quote unquote, real time data for free. So yeah, these guys, you got to look at what they offer you. Let's see, versus exchange data. Well, BATS offers some real-time market data for free, accessing full exchange data from other major exchanges like NYSE or NASDAQ typically required a paid subscription, meaning BATS real-time data is generally considered free compared to the cost of comprehensive exchange data from other sources. Let's see what's compared here. Yeah, limited scope. Although free, the BATS real-time data may not all encompass all stocks or provide the full depth of order book information compared to a paid exchange data feed. I also see differences in the volume too. So you're going to see when you do your charting and you get your BATS data, right? You got to look at what the volume is too. Sometimes you're going to see some major differences, right? That's going to affect. That's why that order book here. So information is money. They're not going to give you all the information you need to trade properly for free, right? Yeah, I think Stock Charts also has like some stuff that they talk about. Why isn't all market data free? Well, we'll see what happens when the Texas Stock Exchange comes around. Okay. All right, let's continue on here. See, Trump with the Panama Canal. I'm going to read this one. No, I'm going to read this. Panama Canal. BlackRock's Fink used direct line to Trump in Panama Canal deal. Okay. Let's see. Donald Trump promised on day one to seize the Panama Canal. We're taking it back. The U.S. president declared in his inaugural address. Within weeks, Wall Street billionaire Larry Fink was on the line with the White House. His pitch? Fink's investment company, BlackRock Inc., was interested in buying the ports on either side of the waterway, shifting them into American hands, according to people familiar with the discussion. And with that, there would be no need to have the U.S. take the century-old canal by force. So went days of whirlwind negotiations that now are set to deliver control of those ports to a consortium led by BlackRock. The $11.6 trillion investment giant Fink has run for almost 4 decades. The deal, which will hand the seller $19 billion, reflects an extraordinary confluence of Trump's America First vision and Wall Street's globe-spanning quest for profit. Trump has repeatedly expressed his desire to regain U.S. ownership of the Panama Canal, which he has claimed, without evidence, is run by China. Fink capitalized on that desire to secure the biggest infrastructure deal in BlackRock's history, handing Trump a win as the president flexes over international trade, the wars in Ukraine and Gaza, NATO, and more. The deal is also a sign of Fink's and BlackRock's ambitions to clinch major deals in far-flung private markets and compete with the biggest alternative asset managers. In a statement announcing the transaction Tuesday, he boasted of BlackRock's ties to companies and governments around the world, noting, "We are increasingly the first call." BlackRock said it agreed to buy the 2 ports in Panama and more than 40 others around the world from C.K. Hutchinson's Holding Limited, the sprawling conglomerate owned by the Lee family, one of Asia's richest clans. In recent months, the Hong Kong family found itself thrust into the center of a political firestorm over who controls the crucial waterway and key ports. For Trump, having a U.S. investment company take over the ports would reduce China's influence in the region, according to people familiar with the talks, who, like others, spoke on the condition of anonymity. Given the delicate diplomacy, the deal wouldn't have come together without Trump's support, these people said. BlackRock is acquiring the operations with global infrastructure partners, an infrastructure firm bought last year and is headed by Adebayo Ogunlesi. Oh, is that a Nigerian prince? Other investors include Terminal Investment Limited, which operates ports served by the world's largest shipping company, Mediterranean Shipping. Fink has moved in Trump's circles for years, and people close to the deal say his personal involvement was crucial. In recent days, Fink briefed Trump as the talks quickly unfolded. Treasury Secretary Scott Bessent and Secretary of State Marco Rubio were also kept in the loop. In a statement, Frank Sixt, co-managing director of C.K. Hutchinson, said the deal resulted from a rapid, discreet, but competitive process and was unrelated to politics. Blackstone and KKR & Co. also considered bids, according to people with knowledge of the matter. Representatives for both firms declined to comment. The White House didn't respond to a request for comment. Panama will review the transaction, and an audit of the Panama Ports contract will continue, according to a statement posted on Panama President Jose Real Molino's account on X. Purely commercial. Under terms disclosed Tuesday, BlackRock, GIP, and Terminal Investment will acquire units that hold 80% of the Hutchinson Ports groups, and the consortium will also acquire 90% of Panama Ports Company, which operates the 2 ports in Balboa and Cristobal on either side of the Panama Canal. We'll probably have ownership of the Panama Canal ones very shortly, Fink told a financial industry conference Tuesday. As Trump publicly complained about China's influence over the canal, Panama's government weighed whether to cancel its contract with C.K. Hutchinson to operate the ports, Bloomberg reported last month. That arose even though C.K. Hutchinson is based in Hong Kong, a Chinese territory with its own borders, currency, and legal system. Beijing has clamped down on the former British colony since 2020 when it imposed a broad national security law that paved the way for a crackdown on dissent. Reached Wednesday morning in Asia, C.K. Hutchinson referred to Sicht's earlier comment. In it, he said, "I would like to stress that the transaction is purely commercial in nature and wholly unrelated to recent political news reports concerning the Panama ports." Oh, well. There we are. Now let's move on back to Germany. Okay, let's see this. Okay, this is from Morningstar. All right. German fiscal bazooka sends euro Bund yields surging. Bund is German bonds. Uncapped defense spending and a massive infrastructure package are putting an era of debt break frugality to a dramatic halt. Germany's incoming chancellor has announced spending plans that break with the nation's long-held doctrine of low borrowing igniting a bond market sell-off, but lifting stocks and the euro. The euro surged to $1.07, its highest level since early November. The move has had its greatest impact on German sovereign bonds, Bunds, whose yields spiked above 2.7%, their highest level in nearly 3 years. The fiscal sea change will permanently alter how Bunds are trading, said T. Rowe Price chief European economist Thomas Will-Lagdeck Wednesday morning. Bunds will likely sell off significantly today and start trading more like other safe haven bond markets out there in the future. The plans were announced by election winner Friedrich Merz, Conservative Christian Democrat Union, and his prospective junior coalition partners. The parties had also agreed to reform the nation's constitutional borrowing limit, colloquially called the debt brake. Such a step would need to be taken before March 25th, while the current parliament, based on the 2021 election, is still in place, as anti-establishment parties won a blocking minority in February's vote. Basically AFD. In a joint press conference Tuesday night, Conservatives and Social Democrats signaled that the parliament could convene as soon as next week to vote on the proposals. How will Germany's debt brake change? Tuesday night's proposal consists of a 500 billion euro infrastructure package that circumvents the debt brake, akin to 2022's euro of 100 billion euro special defense budget. Defense spending is to be unfettered by exempting all expenditures above 1% of GDP from the debt brake, which amounts to removing all constraints, as defense spending already exceeds this level. Finally, the debt brake will no longer force Germany's federal states to keep balanced books, permitting deficit spending at the state level. Combined with the European Union's proposed exemption of military spending from the bloc's fiscal stability rules by activating an escape clause meant for times of crisis, these changes open the door for a drastic increase in defense spending. The announcement surprised the market, particularly regarding the defense sector, where expectations were for a fund similar to that for investments rather than a general indication of the lower limit of potential spending, says Alizan GI fixed income portfolio manager Monica Zani. These decisions translate into at least an additional 1 trillion euro in spending over 10 years, which is just under 25% of Germany's GDP. A 180-degree turn for Germany's fiscal hawk. With this move, Merz has abruptly changed his long-held position that Germany's debt brake was fit for purpose and needed to remain. He said Tuesday that Germany must do whatever it takes to bolster its ability to defend itself, echoing then ECB head Mario Draghi's 2012 speech announcing an aggressively expansionary monetary policy to preserve the euro. Within Merz's party, the plans remain highly controversial. It doesn't get much worse than this. German daily Hutzelblatt cited members of the CDU's fiscally conservative faction saying on Wednesday, after the party ruled out special one-off budgets that skirt the debt brake in its electoral platform. All of this feels like a huge leap that the CDU-CSU appear to have made, JP Morgan researcher Greg Fuzesi wrote Tuesday night. Only yesterday, Merz still said that a large special fund actually increased the pressure to consolidate the rest of the budget. Effects of sovereign debt beyond Germany. Due to the Bund status as a risk-free benchmark for cost of raising debt across the region, Germany's fiscal policy reset is having a knock-on effect on euro area government bonds. Yields are expected to rise as well, creating pressure for other European governments to curtail borrowing in the longer term. The spread between the Italian BTP and the Bund was down about 2.5% to 105 basis points, the tightest since October 2021, as Italian 10-year bond yields rose to 3.7%, less sharply than the Bund. The spread between the French OAT and the Bund declined to 71 basis points, as OAT yields rose to 3.4%. The spread between the Spanish Bono and the Bund fell 4% to 66 basis points, according to Teleborsa. Okay, well, got construction stocks. These might be other stocks that we should be looking at. A lot of the industrial stocks in Germany. The prospect of a new era of fiscal leniency has also boosted European stocks on Wednesday. Germany's DAX benchmark jumped 3.2%, and the regional stocks Europe 600 index was up 1.6% by midday, led higher by construction stocks that included Kion KGX up 17.6%, Werner Berger WIE up 16.3%, and Hostef HOT up 15.2%. European banks also rallied. The Deutsche Bank, DBK, and Commerzbank, CBK, each up about 9%. Italy's Unicredit, UCG, up 5.2%. And BNP Paribas, BNP, up 4.0%. Beyond the Eurozone, Barclays BARC traded 4% higher, and Switzerland's UBS was up 3.1%, though there is no obvious causal link with Germany's move. Today's rally in the European banking sector has effectively recouped on tariff fears. Morningstar analyst Johann Schultz says, "We are somewhat surprised by the swift reversal, given that the tariff narrative remains unchanged. We think European banks, often seen as a bellwether for the broader economy, may continue to experience heightened volatility amid ongoing geopolitical uncertainties." And we see the defense stocks extend rally. The region's aerospace and defense stocks continued to a dramatic rally that started with double-digit gains on Monday. Germany's Rheinmetall and Italian peer Leonardo each gained about 4%. France's Thales jumped 6.7%. Dallas Aviation, Dassault Aviation rose 4.4%. And Sweden's Saab traded about 6% higher. And you can see all these stocks moving up. BAE is British. Okay, that's one that you should look at as well. So yeah, things are moving up. Smaller defense stocks also rally further, with German sensors specialist Hensoldt, we talked about that, 7.0%. Norwegian missile and electronics group Kongsberg trading 3.5% higher. Okay, very nice. Very nice. Very nice. Alrighty. All right, hold up, guys. All right. I think that pretty much completes those two articles. All right. So I'm going to play some stagflation stuff for you guys. Let's hear what stagflation is all about.
Is former Boston Fed President Eric Rosengren. Eric, good to see you. So I think of the Beige Book as being sort of like an intelligence briefing from across the Fed districts. What's the buzz on the street? What are business people concerned about? What are they excited about? Is that right? And what highlights jump out at you from this particular report at a time of a lot of policy uncertainty?
So it's a qualitative assessment, but it's used in conjunction with the harder data that we get from other sources. And so I think it does provide some useful information. I think it highlights that there's growing concern in the business community that tariffs are actually going to happen, that they may be more significant than those people who thought they were only going to be a negotiating tool, and that if that is going to happen, that it'll be more disruptive to their plans for the coming year than many had anticipated.
Is there any chance that expectations of tariffs being disruptive or inflationary, kind of like inflation expectations, can turn out to be self-fulfilling prophecy that, well, if my contacts, if my customers expect prices to go up and then tariffs come into place, well, that means I can raise prices?
Well, I think that's one of the things the Federal Reserve is going to be concerned about. First of all, tariffs are likely to increase prices for many goods that are affected by the tariff. And in some instances, while we have a 1-month delay for autos, you could easily imagine that autos are not only going to be subject to the tariff tax, but they're also going to have supply constraints as the difficulty with their logistics become problematic. So I think that the prices are actually real. We've already seen some prices starting to go up. There's some areas where we're likely to see prices go up actually relatively soon. So if you're thinking about foods and vegetables from Mexico that haven't gotten an exemption, you don't keep a large inventory, they're perishable goods. The result is that the flow through to those price increases is likely to be relatively immediate. Then there are other goods where firms are able to stockpile, or it will be delayed before the shipments actually occur. Those will be, price increases will be occurring over the next 6 months. But the bottom line is that I think firms are going to be expecting to pass a lot of the prices along to consumers. And even those organizations that produce domestically, since their competitors are international competitors, they're probably going to see this as an opportunity to have more flexibility to raise prices as well to improve their profit margin.
Okay, so we've been throwing around this word stagflation, this term here on CNBC and in economic circles. Not every viewer is familiar with it or maybe associates it with Japan. It's one thing if prices are going up or if your dollar doesn't go as far at a time when overall the economy is growing. Another if it's not. What's the threat of stagflation at this point, and what do you think would make that threat more serious?
Well, I think the threat of stagflation is going up significantly. So stagflation is just that prices and inflation are increasing at the same time that you're seeing enough disruptions that unemployment rate goes up at the same time. So that's not what we've been experiencing over the last 20 years in the United States. But I do think the combination of tariffs and some of the immigration policies are going to be very challenging for a lot of businesses. And I do think that some businesses faced with a lot of uncertainty are going to slow down the hiring. And in fact, we have some pretty hard data that the hiring rate was already declining prior to the concerns arising from the tariffs. And I think the hiring rate's going to continue to fall. We had a pretty weak ADP report, which is a pretty noisy estimate of what the employment report's going to be. But the ADP report had only 77,000 jobs, and it was disproportionately weak for small businesses. So I think it just highlights that we're in an environment where consumers could be hit both with price increases, but also have a rising concern that they'll be facing unemployment, not just for federal workers, but for people that are working in the private sector as well.
Joining us now is DoubleLine Deputy CIO Jeffrey Sherman. Are you guys bullish on bonds over there, Jeff?
Yeah, there's reason to be, just given some of the weakness in the data as of late. But it also depends on what we're talking about too. So from a rate perspective, you know, rates could have a little bit of a rally from here. Although the front of the curve really did move pretty sharply over the last, like, let's say 2 weeks of trading, and maybe it's a bit overbought at this point. But what we're seeing here is some of the weakness in the credit spreads across corporate bonds specifically. And it's bleeding over into other areas of the credit markets as well. But what you're seeing is that this fervor and this passion for everything risky has really started to wane over the last couple of weeks. And I think it's really just this talk about the tariffs, and that maybe it's not just bluster, maybe it's just not negotiation, maybe it's not just a transactional behavior, but maybe it's actually reality. And so you're starting to see some of that. And I heard you guys discussing the ISM services. We always hang our hat on services for the economy because it's such a large piece of the overall economy. But when you dig underneath there, once again, it's this prices paid component that continues to be up. And so I think a lot of the fear you're seeing in the market right now, one is high valuation. And when there's high valuation, there's not a lot of room for error. And given some of the tariff talk as of late and just how aggressive it looks and appears to be, and across the board it appears to be, that it really is starting to impact risk assets. And so I think what really one needs to focus on right now is just finding quality still in the marketplace, right? Things that are analyzable, things that can go through the headlines and of get you through the next few months.
What about the stagflation narrative that has developed? I mentioned it when we saw the ISM manufacturing number earlier this week because prices were higher than that, but activity was weaker. Is that bond bullish? Do you buy that story is starting to creep in?
Well, that one's a tough one because, you know, we throw around this word stagflation, and I joke about is it really stagflation if we just have slow growth but we have some 3 or 3.5% inflation rate? I mean, stagflation is what we saw in the late 70s and early 80s, right? And so I think what is that the inflation is not really subsiding, at least in a manner to get the Fed to want to continue back on the path of rate cuts. And so I think the challenge you see, it's in manufacturing. Obviously, when we start to talk about imposing tariffs on steel, aluminum, various cars, you know, all the various input costs on the manufacturing side. But then you're also seeing on the services side as well. And don't forget that we still have a tight labor market. And so I think this idea that you're not going to get volatility through inflation is just a bad one still. It has not went away. This is why the Fed has told you that they're going to be patient in terms of cutting rates. And you just continue to see it through various data sets. So the good news is there is some economic activity in the services data today. That dwarfs the manufacturing activity about 4.5 to 1 in our economy. And so we'll hang our hats on that today on why you're kind of seeing this reprieve there. And also, you know, again, Lutnick's headlines of coming about and saying, well, maybe we won't impose the tariffs, maybe we will. Let's just choose one way or the other. And I think that's what the market's looking for right now. It's breathing a sigh of relief on the economic data right now. But we've got a big calendar coming up. As you mentioned, we got unemployment claims tomorrow. We'll see kind of if there's more of that government layoffs that are inside of there. We'll also get the jobs report for February, and we'll see how strong that employment component of the ISM services data that we saw today leads through into how much job creation there was.
Yeah, we mentioned ADP earlier this morning. We got Trudeau, a story on the tape saying that Canada's not open to removing retaliatory tariffs unless all of ours come off. But I got to get you, Jeffrey, on German yields and whether or not this 10-year move over there makes any sense, and how much more could be done if they do some work on that debt break.
Yeah, I mean, look, this is spending, and for all of the kind of rhetoric and some of the criticisms about the defense spending and the headlines we've seen the last couple of weeks, definitely Northern Europe has woken up to the defense spending. Hats on that today on why you're kind of breathing a sigh of relief on the economic data right now. But we've got a big calendar coming up. As you mentioned, we got unemployment claims tomorrow. We'll see kind of if there's more of that government layoffs that are inside of there. We'll also get the jobs report for February, and we'll see how strong that employment component of the ISM services data that we saw today leads through into how much job creation there was.
Yeah, we mentioned ADP earlier this morning. We got Trudeau, a story on the tape saying that Canada's not open to removing retaliatory tariffs unless all of ours come off. But I got to get you, Jeffrey, on German yields and whether or not this 10-year move over there makes any sense, and how much more could be done if they do some work on that debt break.
Yeah, I mean, look, this is spending, and for all of the kind of rhetoric and some of the criticisms about the defense spending and the headlines we've seen the last couple of weeks, definitely Northern Europe has woken up to the defense spending argument. And so you're seeing that, and the relief valve there are yields. And, you know, $500 billion of spending from the German government coming towards defense, the fact that they're removing some of these caps, potentially some of these kind of ECB-backed bonds out there. where they're going to issue more for defense spending. And so there's a reason for we're seeing some of that convergence in yields. And I think that's going to continue over the near term. And so I wouldn't want to step in front of that today as a buyer. It probably does continue to lend to a little bit more weakness in the dollar, specifically through the euro. We probably get back to about 110 on the euro, just given some of these moves we've seen as of late. But in general, that's kind of a one-way train right now, where we're talking about potentially being more austere. We'll see how that goes through Congress. But definitely, I think there is going to be more of a convergence between, let's say, German bonds and U.S. 10-year treasuries.
It's not really going through Congress at this point. Jeffrey, thank you very much with Eurodollar 107.
What's Congress?
from Double Line.
Yo, what's up? I don't know why that video had a hard time processing through StreamYards for some reason. Hopefully you at least got the audio of that towards the end. I have no clue what's going on here. Yeah, StreamYards. All right. Let's go and look at some of the data. So ISM, they were talking about that. ISM services. Okay, so we got that. Yeah, it did all right. So we got ISM service PMI this morning unexpectedly increased 53.5 in February 2025 from 52.8 in January, beating forecasts of 52.6. Reading pointing to a faster growth in services sector with business activity 54.4 versus 54.5. New orders at 52.2 versus 51.3. Employment 53.9 versus 52.3. And supplier deliveries 53.4 versus 53, expanding for the third month in a row, the first time it happened since May 2020. May 2022. Okay, very good. Okay, slightly slower growth in the business activity index was more than offset by growth in the other three sub-indices. Anxiety continues, however, over the potential impact of tariffs. Some respondents indicated the federal spending cuts are having negative impacts on their business forecasts. Okay. And let's see what happens tomorrow. Tomorrow, I don't think there's anything major. Have the initial jobless claim as usual. But Friday, we'll have at 8:30 a.m. Eastern non-farm payrolls and unemployment rate. And Jerome Powell will talk at I believe, Chicago University, the economics department. He'll be talking there at, I guess, 12:30 a.m. So just after lunch for Eastern time. Okay. All right, very good. So watch out for those on Friday. I think so. Friday will be more important than tomorrow. But so far, let's look at what we got. MicroStrategy's up 3% overnight. And I believe, let's look at, Bitcoin just crossed over 92,000. Supermicro didn't do much today. It tried to go up in pre-market, but failed. We're following with the rest of the semiconductors. So SOXL looks like it will be down 3%, I believe. Yeah, it's down 2.5% overnight, caused by Marvell's earning. Marvell's earning was just so. It's in line, nothing spectacular. I think the market definitely needs more encouragement to pay a lot of money for semiconductor stocks right now. It's down 14% to 15% after hours into overnight trading after earnings. So this is a big deal because it's affecting the larger guy, which will report earnings on Thursday after the close. Broadcom, AVGO followed Marvell. So it was down 2%, 3% after hours. It's down 1.74%. So that's going to affect our semiconductor stocks here. So if you're an SOXL, sorry guys, it's getting harder to get to 25 before Friday. So I don't know if you want to keep it until Friday because, yes, we have unemployment numbers. You have Jerome Powell, a lot of stuff happening on Friday all at once. Not sure if that's going to push everything up, but hopefully, at least Bitcoin is going fine and I can get out of my The rest of my MSTR stuff, MSTX, if you're doing leverage. So let's look at that potential here again. So to remind you, so that's all I've been really doing the past week. It's just MSTR, man. Emmett has sold all his stock. Who knows if that's and it came tropes. Everybody sells all kinds of stocks. I mean, if I listened to that stuff, like I would have sold Palantir like half a year ago. Like they were aggressively selling Palantir stock all throughout, and it kept going up and up and up to 120. So it doesn't matter. It doesn't matter until earnings. But as far as semiconductors is concerned, yeah, it's going to have a hard time this year anyway. I wouldn't trust that SMCI is going to go anywhere above $60 until. So this is SMCI again. Like if you think it's going to go back to 100, no. Is it going back to 60? Sure, it can go back up there and it can keep dancing up and down between 40 and 60 until it finally does something, either break down or break up. And if we look at the weekly chart, yeah, you can see it's trying to recover. But again, if I'm just looking at the whole semiconductors, like just looking at the semiconductors themselves, like tell me this, is this thing really looking bullish? No. Once Nvidia collapses, everything will fall with it, and then the S&P and the Nasdaq 100. So yeah, I would sell everything. I mean, Palantir, they already changed the rules so Carp can sell more of his stock. Anybody who isn't dumb should be selling right now. That's why I said last year, this year is going to go sideways, and then next year we're going to go down sometime next year. That's it. That's the plan. That's the game plan. So for the last 2 years, from 2022 to 2024, that was it. That was your big move. That was the last one from like 2024 up till now is all with AI. And now with DeepSeek in China and now Germany doing its own thing. Yeah, I think it's time to look at other countries, even Mexico, right? Mexican stocks are great. Like, so the ETF for Mexico recovered. So it went down back to 48 EWW, came back to 50. Perfect. That's it. So we're ready to continue. So we've got MEXX. I think, yeah, this thing can double, at least if you're using triple leverage, MEXX on Mexican stocks. And yeah, and it looks like there's plenty of fun with German defense stocks. And I'll probably have to find out if there's some German stocks that you could buy directly in the industrial area, because that will be good for the commodities as well. So not only U.S. natural gas stocks, but also German industrial stocks. If they're going to spend more on defense, perfect. They're going to need to generate more metals, aluminum, all kinds of raw materials to go into tanks and drones and all kinds of shit. So there you go. But I think for the U.S., yeah, the U.S. market, it's going to get tired pretty soon. Yeah, we're going to run out of steam. There's not much left. China will probably be a great play as well. They'll probably continue on after the summer. Probably, if you select the right ones, you can get another 100% there. Deere, yeah, tractors. I mean, I'm still like big on Deere. So DE. So there's going to be some select industrial stocks from America that'll be worth it. Oh yeah, Brazilian, right here just broke out. ERJ I mentioned, I think last week. So they had earnings, and I think we are at all new highs on ERJ. So Brazilian airline manufacturing company. So this one, yeah, I think this is new. It's a new high, right? Yeah, I believe so. Yeah, I think we just made it. Yeah, we just barely made it. This is the last time it was around this level was just before the great financial crisis. I don't know if that's a good sign or not. But yeah, so there's a lot of companies out there, but they're just not American at this point. Okay. All right. So talked about that one good. So Bitcoin at 92,000. All right, folks. Very nice. See if we get to 108, and then we'll see what we can get from MSTR. Okay, so if you're playing MSTX, I think this is the continuing the play here. See if we can get to 340 here. Yeah, good. If we're lucky, we can get to 404, man. And Friday also, be aware the White House will have a crypto conference, crypto summit in the White House. So that might hype it up into Friday. Hey, if we're lucky, it gets to 400 on some crazy pump. Get ready to sell. Get ready to sell. So 30%, that'll be a 60%. If you're using MSTX, yeah, I don't know. This will have been a great week trading this thing, getting some thousands of dollars each time, each trade. That'll be perfect. It's perfect. 60%, so probably about $55. Okay, yeah. So target about $55 on MSTX on double leverage right there. All right, folks. Very good. Oh, yeah, and ASTS, if you missed that one, two days ago, I talked about ASTS, and now ready to break out further, up 18% today. Perfect. So this is the only one of the speculative stocks that did well in earnings, survived the headaches of the last 2 weeks, and the chart is still intact for a breakout. Once it breaks out here, it's going to new highs. So once it crosses $37, see ya in the moon. It'll probably be like another HIMS, just like HIMS. Once HIMS crossed like that last high, it was just like no man's land, and they just squeezed all the shorts up. So right here, once it crossed 35, it just shot up to like 60, $70. So it could be another HIMS event. I don't know. But ASTS, yeah, that's the one to look at. LUNR will have the lunar landing attempt on the surface of the moon tomorrow around maybe noontime Eastern, okay? So expect that. I don't know if I'm going to gamble on that or not, because I was hoping it was pumped today, but it just got stuck at like 5% and below up, so it wasn't following the NASDAQ. If you look at the overall NASDAQ, let's see, on a daily chart, let's look at this. Well, not daily, I mean the hourly chart. You can see right here, we're finally crossing over this line, this dashed line. And if we get the moving averages to curve back up and the green DI to pump, yeah, we'll be doing well. This thing can rally back up to about maybe 520 if you're lucky, 520, okay, into Friday. And who knows, maybe next week you'll get low inflation numbers on next week, Wednesday. It should do well. Yeah. I'll see you then. I'll see you tomorrow. Well, I don't know if I'll show up tomorrow. I think you guys know what to do. Just look for the same stocks we've been talking about before and see if anything happens. I don't think I noticed anything else. Yes, it's just been MSTR, man. I don't know. The Chinese stocks sort of like, yeah, okay. Well, I'll watch JD tomorrow, but I don't think I'm gonna like really advocate for getting Chinese stocks while it's just dancing around the highs still. I mean, you could trade it, I guess, but yeah, maybe gold and silver I mentioned already, but okay, yeah, gold and silver. Maybe I'll say something if tomorrow looks interesting for gold and silver, but I doubt it. You got to wait for Friday for the unemployment report. All right. Okay, guys, remember, like and subscribe. You can email me at crack@jghb.info, and you can Cash App Porsche, $PORSHAJAYE, PayPal, PORSHA@jghb.info. Or you can use Streamlabs to donate, streamlabs.com/TheUrbanLandord. Okay, like and subscribe, and we'll see what's up. Anything else I gotta do? Nope. And wait and see if I'm gonna have to talk to John and see if we can make something happen where we go over the new world order, the new financial system that's going to be in place. that Trump wants to do. Let's see if we can get all the puzzle pieces and try to make a clear picture of what the game plan is. I'm really curious to see how it all comes together, because that will change exactly how you should treat your investments, you know, because I think it's going to be a lot different than the past 40 years. All right. The past 40 years, the game plan that we used to do when we had decreasing interest rates, that's over. And we also do not have globalization. That's it. That's over. I think I heard about her. Sounds familiar. Catherine Austin Fitts. Sounds familiar. Yeah, this sounds familiar. I don't know. I don't like listening to these macro guys too much. There was another dude that I like to listen for entertainment purposes. What's his name? Hugh Hendry. Like, he lives on St. Bart's. He just rents out his rooms in his big little resort hotel and just surfs all day. Let me see. Hugh Hendry. He had some like funny little appearances on Bloomberg. I always liked when he showed up on Bloomberg. Yeah, look up this guy. He always had some interesting things to say. But no, I'm not gonna look for content. I already have way too much knowledge and information that I saved into like my little folders here. I want I'm gonna break down everything because now I got the master plan. I have everything from Posner, from Credit Suisse. I have like the new Economic Advising Council chair, like thesis and all the little articles there. Put that together. Then I'm going to tie it in with the thesis from that Air Force guy about Bitcoin and projecting power. And then we're going to tie everything together with the dollar milkshake theory. And then I'm going to give it to John and tell John, you tell me what it means. Because he has a CFA. He actually has a CFA, and he probably knows more about economics than I do. So he can figure that out. Yeah, that'll be better, especially like, and if he can simplify it for people too, that's much better than I could. Like, I'm just gonna wrap my head around all that stuff. All right, I'll see ya.
Feel like I should, feel like I should, feel like I should, feel like I should go. Go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should. Feel like I should go.